The topic name is cash flow statement. So first of all, you know the meaning of cash here.
The cash and cash equivalents.
Yes, very good. So the statement is just a record. Flow means either inflow or outflow, means whether we are receiving the cash or we are giving it. And cash means cash and cash equivalent. This is the meaning of. So cash flow statement is a record of what? Of inflow and outflow of cash and cash equivalent. Okay. So this is the simple meaning of cash flow statement, but we will discuss the definition. First of all, this is cash flow statement or definition. It is a statement that shows the inflow and outflow of cash and cash equivalent during a certain period. It also classifies the source and application of cash and cash equivalent. Now, why we are doing this? First of all, the question is why we are preparing cash flow statement. Can you tell me any idea you have that why we are preparing cash flow statement? Yes, Ritika.
Financial position.
You're not sure?
It is the financial position of the company.
Cash flow statement is not going to tell that thing. It is not going to tell us the financial position. It will tell us about the cash and cash equivalent. And if we talk about financial position, then it includes the assets and liabilities, all these things. But cash flow statement will not discuss these things. It will show us only the cash related items.
Okay, sir.
Okay. So first of all, why cash flow statement is prepared? So here is this. Actually, in business, cash is very important. You know this. Yes, cash
Yes, sir.
is most important item in any business. Now, how we will know that how much cash will be received? That is cash inflow, and how much cash will be paid during a year. For this, we have to find past situation. Yes, in previous year or previous to previous year, what happened with cash? Is there any increase? Is there any decrease in cash? Or what is the reason for such increase or decrease? So we need to find that where cash is coming from and where cash is going. So for that, we have classified cash into three different categories. So if you see here, cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So by classifying our cash inflow and outflow into these three categories, this is easy for us to understand that from where cash is coming and to where cash is going. So in operation, how much cash we are receiving, how much cash is going. In investing activities means you are purchasing some assets for the company, you are investing money into shares or debenture of other companies, so like this. So these are the heavy expenditure. So that's why it is very important to know that cash is, we are investing cash. And these things like investing activities, these are not regular activities. That's why if there is any excess payment in investing activities, then it is not a problem for the company. But if there is deficit in cash, or you can say the excess cash outflow in operating activities, then it is a problem for us. The next is financing activities, means from where we are receiving money. It may be long-term item, it may be short-term item. So where we are receiving cash from. Okay, so these three categories. Now, cash and cash equivalent have opening balance and closing balance. Opening balance means the previous year closing cash and cash equivalent, and current year closing cash and cash equivalent. We compare these two. If there is any change between these two, then we have to find out that from which activities cash is coming and cash is going. Okay. So now, if you summarize all these things, then you will find out. Then we want to know that what is the reason behind change in cash position of the company. What is the reason behind? Is it operating activities? Is it investing activities? Is it financing activities? Okay.
Okay, sir.
So this is clear to you that why we are preparing cash and cash flow statement.
Yes, sir.
Okay. Now the definition part. Yes, this is the definition, means what is cash flow. So cash flow statement is a statement that shows the inflow and outflow of cash and cash equivalent during a certain period. It also classifies the source and application of cash and cash equivalent. It also tells us the reason behind any change between opening and closing balance of cash. So this is the definition. The next is advantage of cash flow statement. What are the benefits of preparing cash flow statement? You can also say that these are also the reasons behind preparation of cash flow statement. So the first one is facilitates in ascertaining cash flows. We want to know that where is cash coming from and from where it is going. So it helps in knowing that where cash is coming from and where cash is going. Next is helps in planning. Now there is a thing that is called budget. You know about this?
So could you repeat?
Budget.
Budget. Yes, sir.
Now you have studied about this in economics and
Yes, sir.
also business studies. Have you completed your business studies, the syllabus
Yes, sir.
completed?
Yes, sir.
Okay. And then can you tell me what is budget?
So budget is a financial statement prepared for 1 year, which records the receipts and expenditure of the government.
Receipt and expenditure of
The government.
the government. Okay. So budget is only prepared by the government.
Yes, sir. So that is government budget.
Actually, it can be prepared by the company also. It is not like that it is only prepared by the government.
Yes, sir.
Budget is, you can say, a statement which is prepared to anticipate the future income and expenses of any company or the government. Okay, because you prepare the budget to to estimate things. Like in every house, also they prepare budget that how much expenses we have to incur in coming month and how much income we will receive. Is this happen?
Yes, sir.
Yes. So budget is prepared by companies also and also the government obviously because the main duty is to prepare budget and see that how much income and expenses they are going to incur. So uh, budget is prepared by company. So we are talking here for by sorry we are talking here for the company, okay, not the government. So there are different types of budget which is prepared by company, like sales budget, purchase budget, expenses, cash budget, master budget. So there are different types of budget. This is a chapter planning in business studies. Uh, Plan is divided into two parts: a single use plan and multiple use. Yes.
Yes, sir.
So budget is part of single use plan. Yes.
Yes, sir.
So this is our budget. Now, in the budget, we prepare cash budget also. Now, it will tell us that in future, how much money we are going to receive, cash, uh, receipt, and cash payment. And if, let's say, payment is more than receipt, then we will find another source so that we can receive enough cash for expenses purpose. So this is our cash budget. And for preparation of cash budget, this cash flow statement will help us because on the basis of past data, you prepare the future estimates. Yes or no?
Yes, sir.
So if you have to expect like your future performance, then someone will see your past performance so that they will analyze things. So, in the same manner, if you want to prepare cash budget, means budget for the future, cash estimates, then you have to see your past data, and cash flow statement will help in finding this data for future estimates. Is this clear?
Yes, sir.
Okay, so this helps in planning also. Next is helps in assessing liquidity and solvency. Now we have completed our ratio chapter, so I think you know the liquidity and solvency concept.
Yes, sir.
What is it?
So liquidity is the ability of the business to convert their cash and cash equivalents into cash. Sorry, into their assets into cash and cash equivalents in a short period.
Yes,
And
very good.
solvency is the ability of the firm to meet their long-term financial obligations.
Very good. Yes. So liquidity means how much cash we have, or in the short term, we will able to pay our liability or not, like interest or any liability which we have to pay within 12 months. So for short term liquidity means. And for solvency, it is long term liability. So we are able to pay our long term liability or not. Okay. So this help us in assessing the liquidity and solvency means we will able to pay our short term liability and long term liability both or not. Okay.
Okay, sir.
Next is efficient cash management. Efficient cash management means every time, let's say if we do something like any function or any thing in which we have to do some expenses, so we try to control our expenses. We try to control our outflow of cash. Okay. So if you know that where cash is going, where cash is coming from, then you will be able to manage your cash efficiently. Otherwise, the flow will be uncontrolled, and maybe your expenses will be more than expectation. So that's why cash flow statement help us in efficient cash management also. Now, comparative statement, yes, we can easily compare 2 years data with the help of cash flow statement. So actually, cash flow statement will help only with the comparison of cash items. Okay, so in general terms, if we compare our statement of profit and loss and balance sheet, then it is better. But yes, we can compare cash flow statement for cash related items. So it also helps us in comparative stating, helps in decision making. Yes, if I have to take some decision, then I have to rely on past data, and cash flow statement also provide us the past data which is related to cash. So it also helps in decision making. Now, limitations. Actually, whenever I see limitation, I uh, maybe this is my opinion, not everyone else. But yes, whenever I see limitation, I find it very difficult to relate with the topic. Like in this situation, you can see the first limitation is non-cash transaction are not shown. Okay, so cash flow statement is prepared especially for cash related items. So why this limitation? Okay, this is not a disadvantage for cash flow statement, but yes, you can say non-cash transaction are not shown. So if you have to see the non-cash transaction, then you will refer the statement of profit and loss and some other statements, not cash flow statement. The second is historical in nature. Yes, it shows the past data only. That's why it is historical in nature. It cannot show the present or the future data. So we will record only the past data. In financial statement also, uh, it is historical in nature. In cash flow statement, it is historical in nature. The third one is assessment of liquidity cannot be done. Now, if you see the point number three in advantage, it helps in assessing liquidity, but in third point limitation, assessment of liquidity cannot be done. Means we cannot identify our liquidity position with the help of cash flow statement. Now, why it is saying this? Because cash flow statement is combination of all the cash inflow or outflow during the year, not only the short-term items. Okay, so it is combination of all the cash transaction. That's why it is saying that assessment of liquidity cannot be done. But if we separate things like long-term items and short-term items separately, yes, we have to do some efforts for that. But if we separate these items, then we can easily find liquidity. But yes, there is a limitation because in normal course of business, you cannot easily find out the liquidity position of company through cash flow statement. Okay, so these are the advantage and limitation. Now tell me if you have any question in advantage, limitation, and definition part.
So
Okay. I think you have completed your cash flow statement also in school.
we have, sir.
Okay. So you already discussed these things like cash flows of operating activities, investing activities, and financing activities.
So we did, but they only taught it the month before exam because they had to finish their portion, so they didn't do it very detailedly.
Okay. So cash flow from operating activities, investing activities, and financing activities. Now, I told you that there are three types of activities that we have to cover in cash flow. And when we will prepare the cash flow statement, you have seen this, like the first item is cash flow from operating activities. You prepare all the operating activities in that, and then investing and then financing. Okay. So can you tell me what are the items that we will include in investing activities and why we are doing?
Certain investing activities.
Yes. Because once you understand the investing and financing, you will automatically understand operating activities.
So does sale and proceeds of fixed asset come under this type?
Okay, sale and proceed of fixed assets. Okay, very good.
Sir, I don't know this chapter well actually.
Okay. Okay. So let's say sale of building. Now, if I say investing activities means we have to invest money somewhere. Yes,
Yes, sir.
means I have to give money. The main focus is on outflow of cash in investing activities. In financing activities, I am receiving cash from different source. Yes.
Yes, sir.
So sale of building, in that case, we will receive money.
Yes, sir.
In which category it will come? Investing or financing?
Financing.
Because as per definition, it should be financing activities, but it is not. You just told me that sale of building, proceed from sale of assets, fixed assets, is under investing activities. Yes or no?
Sir.
Yes. So payment for purchase of asset. So why we are taking sale of building in investing? If as per the definition, it should be under financing activities. So the difference between investing activities and financing activities is in investing activities, we have to put or give our money first, and after that we will receive money. So first we have to give, then we will receive money. Okay. And in financing activities, first we will receive money and then we have to pay. So if you differentiate between these two, then you'll easily understand the investing and financing activities. Receive money and then we have to give it back. So in financing activities, like if you sell your own shares, debentures, so you'll receive money, you will take loan from bank. So in all of these cases, you will receive money first, and after that, you have to pay back the debenture, you have to pay back the loan, or you have to pay interest on these things. So these are financing activities. You are receiving money first, and then you are paying it. Okay.
Okay, sir.
And in investing activities, you have to invest your money first. So you will purchase building first, then only you can sell it. Yes or no?
Yes, sir.
So if you purchase a building, then either you will receive rent from it or you will sell the building and you will receive cash. So what is happening here first? You are giving your money, giving cash first, and then you will receive cash. Yes or no?
Yes, sir.
So this should be investing activities.
Okay, sir.
Now it is clear. You can differentiate between the investing and financing or not.
Yes, sir.
Okay, let us take any example that may be given in the question. Let's take investing. Okay. Uh, Buyback of shares. What should be the activity name here? Buyback of equity shares.
So financing activity.
So buyback of shares means first we have to issue our share, then we can only buy back.
Yes, sir.
So first we will receive money, then we have to pay it. Because if we are buy back share going to do it, then we have to pay money. But first we will receive it. So yes, it has financing activities. Okay, what if we are receiving dividend? Either we can receive dividend or we will pay dividend. Tell me about both of these.
So receiving dividend, will it be investing?
Investing, very good.
And then paying dividend would be financing.
Yes. So receive dividend means you will invest some money somewhere, then you can only receive dividend. And in the same manner, if you are paying dividend, then you have issued your share in the public in the market to the public. So now you have to pay dividend to those shareholders. Understood?
Okay, sir. Yes, sir.
Very good. So is it now clear to you that what is financing activities and investing? If you have any confusion, please ask question because this is most confusing part in the process.
No, sir, I understood.
Okay, good. So let's see the financing activities, investing activities. Yes, cash inflow and outflow related with acquisition and disposal of long-term assets and investment, which are not held for resale. Okay, so if we purchase something for the purpose of resale, then it should come under operating activities. Okay. So cash
Okay,
inflow
sir.
and outflow related with acquisition and disposal of long-term assets means either we will purchase the long-term asset or we will sell the long-term assets. Both are included in investing activities. Now, if you see cash inflow, it is proceed from sale of fixed assets, proceed from sale of investment, rent received, interest and dividend received. Again, cash outflow, payment for purchase of fixed assets, payment for purchase of investment. So these are the things under investing activities. There are not more items in this investing activities. Okay. Now the financing activities. Cash inflow and outflow related with raising funds, it result in change in capital structure. So whenever is there is some money received under financing activities, it will change our capital structure. How it will change our capital structure? Let's say if we have 5 lakh equity shares, sorry, 5 lakh rupees equity shares and 3 lakh debentures or loan. So the ratio is 5 is to 3. If we raise money through loan, then ratio will change. If we receive money through equity share, then the ratio will change. Yes or no? So in any situation, if we are raising funds, then it will change our capital structure. So either you receive money from issue of share or you pay dividend. Both these items will come under financing activities. In the same situation, if you issue your debenture and you pay interest on those debentures, then it is also financing activities. So cash inflow, proceeds from issue of share, proceeds from issue of debenture, borrowing of loan, and all these items will be in cash. You have to remember one thing, that these items should be in cash. If you are doing these transactions not in cash, in some other things, then it should not come in cash flow statement. Okay.
Okay, sir.
Now, cash outflow. Redemption of preference share means once if you issue preference share, then after some year you have to redeem it. Means you have to pay the money back to the preference share. Buyback of equity share. If you issue equity share, then maybe after some year you decide to buy back those equity shares. So in that case, it is also cash outflow. Redemption of debenture means you are paying money back to the debenture holders. Repayment of loan means payment to the bank, payment of interest, payment of interim or final dividend. So all these items will come under financing activities. Now, what is operating activities? This is the most difficult part in cash flow statement, because investing and financing is just confusing. But yes, if you have to calculate cash flows from operating activities, this is the most difficult part in this chapter. Now, if we have to discuss cash flow from operating activities, there is two types, two methods to calculate cash flow from operating activities. One is direct, second is indirect. We will discuss this later, but in your syllabus, there is only one part, one method, indirect method. Okay, not direct method. So I will tell you about both of these, but we will discuss in detail only indirect method. Okay. Now, what is operating activities? So the meaning is, what is your business? Okay. And if you do any transaction which is directly related with your business, it is required for your business, then it is operating. Okay. Like if your business is to sell, purchase car, then if you purchase a car, it is your operating activities. If you sell car, it is your operating activities. But if your business is related with furniture and then you purchase a car, then it is not operating. Yes or no?
Yes, sir.
What will be operating here then?
Purchase or sale of furniture.
Purchase or sale of furniture. So purchase of car will be considered as,
Other income. Sorry,
yes,
sorry. No, sir, no, sir. Uh,
only you have to classify in these three categories: operating, financing, investing.
so investing.
Yes, it is investing.
Okay, sir.
You are acquiring a long-term asset. So in that case, it is investing. And if I tell you that you are selling your car, then
They're investing.
It's still investing. Yes, because acquisition or disposal both are in investing activities. Yes. So now what is cash flow from operating activities? So operating activities are the principal revenue generating activities, that is cash inflow and outflow related to main business. So if we have any side income, then it is not categorized as operating activities. But it is incidental. Let's say it is somehow related with our main activities, then it is also operating. Okay.
Okay, sir.
Okay. Now cash inflow. Cash received from sale of goods. Yes, obviously we are selling our main item. So it is cash inflow. Royalty fee and commission. Cash received from trade receivable. Royalty fee is included in cash inflow of operating activities. Okay. Sometime when we purchase any, sorry, when we take on lease some property. So if we are receiving royalty from those property, then it will go to investing activities. But in general, royalty fee and commission will be considered as operating activities. Cash received from trade receivable means you have sold your goods on credit basis, and in future you are receiving cash from debtors or bills receivable. Then this is also cash inflow of operating activities. Refund of income tax. Income tax is charged on income of the business, so it is also operating activities. So it will be considered as cash flow from operating activities. Cash inflow and outflow is same. Sorry, it's a mistake here. Uh, yes, all the items are same actually. I forgot to change here. Okay. So I'm telling you, cash outflow means purchase of goods for cash. Okay. So if we purchase our goods for cash, then it is also operating activities. If we pay direct expenses like wages, carriage, freight, this is also operating activities. If we pay the indirect expenses, which is important for the business, like salary and rent or uh, printing stationery expenses, electricity expenses. So all these expenses will be considered as operating activities. So there are many types of expenses which is required for the business. So all these items will come under operating activities. Now, payment of income tax, it is also operating activities, and payment to creditors, it is also operating activities. So these items are cash out. Is that clear?
Yes, sir.
Okay. So actually, if you have taken the screenshot or you have written these, then please change your cash outflow. It will be purchase of goods. Purchase of goods for cash, payment to creditors, and payment of direct and indirect expenses, and payment of income tax. Okay, so these are the cash outflow under operating activities. Now, as per AS3, cash flow statement can be prepared by following two methods, direct method and indirect method. Actually, direct method is a little bit easy than indirect method, but it is not in your syllabus. They want you to try the hard method. So yes, we'll discuss indirect method. Okay. So tell me, is these things that we discussed today, like operating activities, investing activities, and financing activities, is it clear to you?
Yes, sir, it is.
Okay. So now you will be able to bifurcate these things. So let's discuss about some important points. Okay, what is direct and indirect method? That is important part. So if you have seen the statement of profit and loss, how it is prepared by we take revenue from operation. Yes,
Yes, sir.
we take other income of business, other income which is related to the business, not like profit on sale of asset. These items are not included here. So we take these things, then we deduct different type of expenses, and after that we calculate the net profit. Yes.
Yes, sir.
So this is direct method. Now, in revenue from operation, we will take cash item. In other income, we'll take cash item. In expenses, we'll take only cash expenses, not the credit ones. And tax is also cash payment of tax will take. And then we will calculate here profit after tax. Okay. So in this profit after tax, in a statement of profit and loss, the cash and credit, both items are included. Yes or no?
So could you repeat?
In this profit after tax, the cash and credit, both items are included. Yes or no?
Yes, sir.
Yes, because the revenue from operation, if you take revenue from operation, for example, you take cash sale and credit sale both, not only cash sale, because the statement of profit and loss, we don't prepare it on cash basis, we prepare it on accrual basis. Yes.
Yes, sir.
So every item that we record in our business may be in cash or credit. But in cash flow statement, we cannot record credit items. So we record only cash part and operating part in this.
Okay, sir.
Cash part and operating. Now, what is not operating and not cash? Depreciation, because depreciation is not a cash item. Yes.
Yes, sir.
It is result in decreasing the value of assets, so there is no cash outflow. Like interest payment, if you are paying the interest, it is financing activities, not operating. Like if interest income is here, then it is investing activities. If rent received is given, then it is also investing activities. So these type of items is not considered in cash flow statement for operating activities. Okay.
Okay, sir.
So in a statement of profit and loss, we will remove credit items and we will remove non-operating items. Then we can calculate cash flow from operating activities, and this is called direct method.
Okay, sir.
Now it is why it is said direct method, because we are going in the same direction as we calculate profit. That is why it is called direct method. In indirect method, we go reverse. We go from profit to the sale.
Yes, sir.
So in indirect method, we take net profit after tax first. net
Okay, sir.
profit after tax, then whatever the item which is included in this profit and the item which is non-cash or non-operating, we remove those items. So we add any non-cash expenses here. We will add non-operating expenses also, because these items are already deducted from the profit. Yes or no?
Yes, sir.
These items are already deducted from the sale, and then we have find the net profit after tax. Okay, so actually tax is also added here so that it will become net profit before tax. Okay, and after that we will add non-cash expenses, non-operating expenses, and then we will deduct non-cash income and non-operating income here. Sorry, it will be less. Non-cash income and non-operating income, because these income is already included here, added here. So now we have to deduct it, because we have to remove all the non-cash item or non-operating item impact on our profit. So after that, we will find our uh, net profit before working capital changes. Now, in this, working capital changes is considered. Now, what is working capital? Can you tell me again?
So working capital is the capital used by the business for their day-to-day uh,
Yes.
activities in the business.
So this is the definition part. But what is the formula for calculating working capital?
So current assets minus current liabilities.
Very good. Current assets minus current liabilities. So if we take current assets and current liability, these are included in working capital. So if any change happen between current assets and current liability, then it will affect our working capital. Yes or no?
Yes, sir.
So all the change in current assets and current liabilities, either increase or decrease, is added or deducted from here. Okay. Then after this, we add, oh, sorry, we deduct tax, and then we calculate cash flow from operating activities. Understood?
Yes, sir.
Actually, we will discuss these in detail. I'm just explaining the things that how we have to calculate these things. Okay, so these are the, you can say, the overview.
Okay, sir.
And in the same manner, like there will be two column for amount. One column for all the calculation here. Then we will write the final amount of cash flow from operating activity. Then we will write all the investing activities item, all the add or deduct item. Then we will calculate the final amount of investing activities, and in the final column it will be written. And then we will write financing activities item in the inner column, and then after that in the final column. So we will calculate the net change, net increase or decrease in cash and cash equivalent here. Now, if it is increase, let's say we get 5,000 increase, then it means 5,000 positive balance. Then we will write here opening cash. And if it is 5,000 increase, then if opening cash is 10,000, so closing will be 15,000. Yes or no?
Yes, sir.
And if it is decrease of 5,000, then closing cash will be 5,000 rupees.
Yes, sir.
So when we will prepare the whole cash flow statement, then This is the proof that our answer is correct. If your cash and cash equivalent increase and decrease with opening cash and cash equivalent do not match with closing cash and cash equivalent, then your answer is not correct. Okay,
Okay, sir.
so this is our cash flow statement concept. Tell me if you have any doubt, you have any question from your previous questions that you have solved for this in your school or any topic.
No, sir, I understood whatever you taught today.
Okay, so there may be different types of doubt when you have studied this chapter in your school.
Sir, I didn't understand anything then. So I don't have any doubt.
There is no doubt. Yes, there is only two situation where a student don't have any doubt when you understood everything and when you understood
Nothing.
nothing. Yes, that is correct. Okay, so if you don't have any question, then that's all for today. We'll discuss the format part, the cash flow from operating activities under indirect method. I will teach you the direct method also, but if we